Let's get more reaction to today's market action. Bring in our own Jeff Mills, the general, who's not only a fast money trader, but of course the CIO of Bryn Mawr Trust. So you're a strategist as well, Jeff. We thought we called you in to see if you believe in this sort of sector rotation that we saw today.
Yeah, it's great to join. Sorry, I can't see everyone. I do believe it, but I agree with Dan in the sense that, look, this isn't going to be a straight line. And I think any inclination that there's trouble with the vaccine or we have fits and starts with some of the headlines, you will see people flood back to the safety of that growth trade. But I think if you look back, say, between now and the end of the year, so look that far ahead for a second, I do think that this piece of news removes one of the primary governors on the breadth of the market that we've been so desperately missing. And, it's the efficacy rate. I think that's a big surprise. I think this probably gives us, obviously, a clearer timeline. I also think it increases the chances that others are going to come out with a vaccine of similar effectiveness. And if you go back to last Wednesday, as an example, post-election, the market was up quite a bit, but 57% of the Russell 3000 was actually down on that day. So I think the more conviction investors can get that we aren't going to backslide into the abyss, then I think that typical rotation that we would have expected off of the bottom, so into cyclicals, can start to materialize. And I think we can start to begin to anticipate the beginning of a new economic cycle as we move into 2021. Again, it's not going to be a smooth ride, but I think that valuation gap does start to close over the next 12 months.
We talk so much about positioning on this show, Jeff, and obviously a lot of institutional investors, professional investors have been so heavily invested in the tech trade, and so maybe got caught off sides a little bit by what happened in today's market as well as the past few days. And I'm wondering, Jeff, if you think this is just sort of a resizing their positions as we go into year end. You don't want to be too heavily in tech. You don't want to be seen as being too heavily in tech when you've got this cyclical trade on.
Yeah, I mean, there's no question that people were a little bit offsides. I think the moves that we saw today were extreme, and it's certainly not going to continue in this fashion, for the next number of weeks or months. Again, we will have fits and starts, but to my point about the valuation gap, at the height of the tech bubble, just to put it in context, you had about 14% of the Russell 3000 that traded at greater than 10 times sales. Today, that number stands at almost 12%. So obviously large cap tech is in a lot better of a position today than they were back then, but signs of excess in that side of the market. And when you think about the calculation now, so I still think we get some sort of fiscal stimulus. Now you have the vaccine that looks a little bit more clear. You have the Fed that's probably not going anywhere. And you have pretty decent earnings growth. I mean, companies that are beating by 20%. The average is 3 or 4%. And if you think about earnings growth expectations out to 2021, 2022, it is industrials and financials and materials and consumer discretionary and obviously energy coming off a very low bar. But those are the sectors that are going to grow earnings the most quickly, and those are the sectors that have been most depressed from a valuation standpoint.
Hey, General, it's Tim. So I think what you're saying there around the EPS dynamic is that we were giving companies a pass on 21 and we're saying normalized in 22. Are you saying that the bar now needs to be raised before 22? Because I think you get some kind of good news is bad news as it relates to the market's interpretation of stocks.
Yeah, and I'm saluting you, Tim. You can't see me, but I'm saluting you. I do think that's the case.
I feel it. I feel you.
Now, as people start to move in more of a clear direction toward the cyclicals, then obviously more optimism is going to be priced into those names, and you're not going to be able to look to normalized earnings in 2022 or 2023. People are going to have to expect earnings materialize a little bit more quickly than that. And I think if this news continues in this direction, that will be the case. But I also think, again, to the point that there's a lot more wood to chop here, I think stimulus has to be part of this equation. I actually tweeted this out earlier to varying degrees of skepticism, but I think that the vaccine news today may actually counterintuitively be the impetus for another round of stimulus. So if you have the government that knows it's building a very specific bridge from today to a time where activity can return to normal, I think the additional spending may be more palatable for both sides, actually, and you have less of a fear of this throwing good money after bad because the end game is a little bit more clear. So if you have that earnings materialize, which I think you probably have a better chance of now, and you have that stimulus at least in some form, I think it helps the rotation.
Jeff, love your work, and I was going to actually ask about your tweet, so you answered that before I was able to ask it. So I'll ask you this. Huge move in the banks Is this something that now makes sense, or put your trader hat on and you say you fade a 15% move in some of these big cap names?
Yeah, so if I'm trading the banks here, I'm probably going to fade the move. I've been talking about how we've been positioned in more of a cyclical way for a while, but I've been skeptical as it relates to the banks just because I think it's so tied to interest rates. Whether they should be or not, that's how they trade. And I'm a little bit skeptical that you're going to see a massive steepening of the yield curve or a really precipitous rise in rates. So in financials, I would still rather be in diversified financials like, a Goldman or a Morgan Stanley, or payments like Visa or MasterCard. I was actually looking at the chart of Schwab today. It broke a multi-year downtrend. It actually looks like it's picking up some momentum. So interesting there. So the banks specifically, I think they can participate once the rotation picks up steam. But this kind of move today, I think you can probably buy them a little bit lower again.
All right, Jeff, great to see you. Thank you. And in true Fast Money fashion, he's self would you rather, in case you didn't catch that. Jeff Mills of Bryn Mawr Trust. Karen, I'm wondering if you took this opportunity to trim anything else in your portfolio, seeing the outsized moves that we saw across a lot of the value sectors which you own.
Right. Well, actually, I didn't. The one that I would probably lighten up on through selling out of the money calls would actually probably be the banks. This move, as Tim pointed out, has been, before today, was up big. So 30+% for, JP Morgan was at 91 or 92. So I'd probably sell some out of the money calls. I was looking at a Dees 120. I like the banks, I want to hang on to them, but this move is really gargantuan.
Yeah.
Shepard Smith here. Thanks for watching CNBC on YouTube.